Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. Some mixed markets around the world this morning. Europe was off a bit as Asia has a positive tone. The Nikkei reversed after 1 month lows, while the Shanghai was up more than 1% after its holiday. So, Scott, what do you think of the strength of world markets before we dive into ours?
I think the backdrop of the world markets are encouraging. You know, the Nikkei has been a leader most of the year. It did make 1 month lows, but it did reverse off that. If you look at the chart here of the EWJs, you will see that, yes, we had an unbelievable run to the May 22nd peak. And from there, you know, it's been a lot of entries and exits matter if you actively approached the Nikkei. But overall, you know, we just had this breakout and it came back and retested. I think, you know, it's kind of holding where it had to. I think 1150 is pretty important. Let's make sure it stays above there. You know, as you said, the Shanghai opened up after its week-long holiday. And overall, you look at the action since the double bottom over the summer. You had a higher low, higher low, higher low, broke out from here, okay, gave you a quick move. And now it's, you know, holding above the moving averages. So I'd say at this point, overseas markets are hanging in there.
Meanwhile, our futures are hugging the flat line after a down day on Monday, and as the government shutdown continues, I'm assuming maybe when Washington finally gets out of the way, it'll help us get our strength back.
That's what we're trying to look at, but we're still about 8-9 days away from the debt ceiling. So with that said, we're trying to figure out what type of corrective phase is this, and that's when you have to figure out what type of market participant are you, because you have to know what type of trend and how active you want to be. And if you look at the SPX, you will see ever since the November low, we've had a really nice strong trend. Tested once right here, tested again right there, and here we are coming into, you know, support, trendline support, and the 100-day. So you take a closer look here as an active trader. If you're looking to trade for P&L, you know, you're probably worried, or you're trying to make money. Can you make money short right around here? Do we break the 100-day that held us right here, that held us right there, you know, for a potential retest of 1627? Or, you know, was this corrective phase enough right there where then we reclaim, you know, this descending channel continues? So I think a lot of people are trying to think the same thing, and look how people don't really know. You know, 2 green bars, red bar, green bar, red bar, and now we're opening right here. So what we do know is this low here of 1670, and then where the 100-day is, and then we're going to have to watch and see how we actually handle that zone.
Yes, and yesterday, as we often discuss, we talked about how in a sea of red, you look to the strongest sectors to see how they fare, and 2 strong sectors we said to watch were the BIOS and the Russell, which both lost momentum yesterday. So what do you think about that?
Well, they didn't pull us up. So you have to take a little bit of notice. So if you trade again for P&L actively, you want to make sure you don't get caught, you know, what could be some type of little corrective phase. And look how this, you know, bar, as it wasn't huge, but you know what, it closed on the lows right around the 21-day. We haven't been below the 21-day in a long time, so we got to see what happens here. So if you're trading the BIOS short term, you got to really watch this 206.55. We closed below this support. You could see the 50-day at 201. And if you go to the Russell, same type of thing. Russell did not pull us off the lows like it's done, you know, other times when we had a big gap down. Overall, big time trend still intact, but it looks like if you were playing for momentum to the upside, you better think twice. You know, I think this right here, this level of 107 is pretty, actually not 107, 105 and a quarter is pretty big. If we hold that, I think we stay in stride, but if this were to break, risk can happen fast. Then you have the 50-day, and then you have the trend over there.
And then meanwhile, on the weaker side, the financials and the home builders had been a headwind, and they continued to be heavy yesterday.
Yes, so the financials did not make new highs with the market, so that was a signal that that breakout failure at 1709, you know, is a spot to take risk off. You look here at the XLF, and 2 things you got to know. No new high when a lot of indices made new highs, and now watch on the XLF, 1973. We break and close below 1973, you're going to see more weakness in the market perhaps. XHB also, you know, was trying to hold this prior breakout, and it's hanging by a thread here. This is your pivot, 2981. If it breaks below that and can't reverse, that's also going to bring down the market.
And quickly, Apple, we know, got a lift yesterday morning on that Jefferies upgrade, but the stock did run into resistance and retraced back to lows to close the day up just about 1%. What did you think about the composure of Apple yesterday?
I think it was fine in the scheme of what the market was doing. Obviously, I would have loved it to break out above 492 and hold, but there's just not a lot of momentum. I still think it looks good. You know, as long as it stays above, just say 475, if you look at this pattern, I think it's intact. That's the low pivot to trade against if you want to give this some room. And then if we do get a bit of a better market, next time it tries to get above 492-ish, perhaps it continues. But in a very weak market, it's hard to get sustainable moves. Something like Tesla, though, is trying to hang around. You look at this trend. You had a nice 2-day bounce for those people who bought it on Friday. What was that, Thursday, whatever it was. You got your easy move now. See if it stays above 177. And those who keep asking me about Facebook, as long as it stays above the 8-day, which has been holding during this move, I think you stick with it, but do a little less because this stock has had a major run.
And of course, we'll be talking about all of this and more in the full morning call, so stay with us.